bit. Yeah, try that. Hey everyone, hopefully everyone can hear me now this time. We are trying again. This is the second time here. We are going live um, for, again, Wise Wealth Wednesdays. As always, every single Wednesday at 7 p.m. I am able to come on live for you guys and share what's been going on with me. And for all of the viewers out there, we are effectively live for every single Wednesday for you guys. So throw the questions on there. Hey Jason, how you doing? Volume's better now, G1 Mercury. We were having some issues with the volume, so hopefully everything's coming in crystal clear. We've got the overhead light off, and so hopefully that's not too bad with the shadows, but we are all in white light now, so hopefully that quality of video is coming through for you guys. That is the intention. I know we're using a smartphone and using Wi-Fi. Great that you made it on. So that's the intention here with this video, is to unlock the best quality for you guys. So that's why I restarted the video. Start again, hopefully nice and crisp, so you guys can hear everything that's going on, and I can share that with you. So today's session is about unlocking greater returns than market value, right? Or greater returns than market. And in any business, whatever you're doing, if you're starting a, let's say you're selling like mattresses, or you're selling cars, or you're buying real estate, or you're trading stock, at the end of the day, the key piece is always making sure that you have a competitive edge, right? And whatever you do, I recommend you find that competitive edge and you exploit that edge, and you leverage that, right? And you use that to your advantage, right? So the key piece here is find out what is that edge that you have, and then how do you exploit that. So for instance, if you're a contractor and you're really good at doing like tile jobs, but you always take on like full like basement renovations, and you just do the tile job the best, it might make more sense to exploit that competitive advantage and just start doing tile jobs. Or, you know what I mean, that sort of thing, about exploiting that strength you have, and really using that to your utmost advantage. And the same thing is true in real estate and in anything really that you invest in. You want to make sure you have a competitive edge. So if you're just buying, and if you don't have a competitive edge, I would argue find someone who does and invest in them, right? And that can even mean in the stock market, for instance, buying the S&P 500, or buying an ETF fund, or buying into a manager that you can trust, or a fund that you can trust, that'll be able to do the work that you can't, right? If you don't have 10 hours a day to analyze stocks and try to pick the best one, and even if you do, you likely can't beat the market consistently, right? Like 98% of active traders don't beat the market over a 10-year horizon. So in a year or two they will, but over a 10, 20-year horizon, they will get the same return as the S&P 500. That is the benchmark, right? Like if you can't beat the S&P 500, don't get me wrong, it's good that you're getting out there and getting that experience. And I would say that buying your first deal will give you that, you'll be invested in learning and investing in yourself learning. So I think that's super important. But what's even better is finding a way to have a competitive edge. So if you know how to rent out units to students, and that's like you're good at that. Maybe you exploit student rentals, or you're good at finding the deal. Then maybe that's what you should do. You should go out there and use that to your utmost advantage to find the best deal possible. So that is what I want to talk about today, is how do you exploit that? And hopefully some of the questions get back to talking about, people ask me, how do I know whether I should focus on real estate on the side, or focus on my day job and try to get promoted, or pick up, I have an entrepreneurial business. How do I spend my time between that, or this side hustle, or that side hustle? Well, yeah, the idea is that you want to build a competitive advantage. And that's what I love about real estate, is that you can't do this in the stock market the same way you can in real estate. With real estate, you can use information asymmetry, for instance, to give you a competitive advantage. You can exploit the fact that there are bad agents out there, like a good half of them are bad. You can exploit that, right? They're selling properties and they aren't marketing them properly. They're not responding to phone calls. There aren't good pictures, all that sort of stuff, right? You can leverage the fact that most investors don't, like a lot of real estate investors, don't crunch the numbers. They don't crunch them properly. They'll buy a property because the real estate agent sold them on it. They'll buy a property because they look at it and they think, oh, it's bringing in $3,000 a month in rent. That's great. My mortgage is only $1,500. But they aren't crunching the numbers to figure out the cap rates, to figure out the return on their investment. They're not thinking about an exit strategy. They're not thinking about how they might refinance the property, or there's different angles that you want to look into and explore. So those are sort of the things that I would say you want to be looking at, and kind of give you guys an update on what I've been up to. Mike Rosehart has been super busy, and I apologize. I need to make more videos for you guys. I know I need to do it. I've just been so busy with everything going on. It's summer right now, right? So I've been spending a lot of time with my family and with my daughter and stuff like that, as well as these new companies that we're setting up, right? The property management company, you know, Right Way Management is the name we're going to be going under, and you know, setting up the properties holding companies as well. We have several companies we're going to be setting up. One to invest in joint venture partnerships with investors who are basically reaching out and saying, hey, Mike, I want to buy properties with you, and you know, we don't want to buy them personally, we want to buy them in a corporation, basically to protect ourselves from a leverage perspective, as well as from a liability perspective. We want to have that layer, that wall there, so that sort of makes sense. That's why we're doing it, my partner and I there. So that's been what I've been up to in the last week. Like I say, we had 5 deals, but trying to find, you know, the right person to fit with each deal. So that's been something that's been, hey Jonas, how you doing? Yes, Wise Wealth Wednesdays. Every Wednesday at 7, I hit up all the questions. All the regulars pour in, hopefully. I see Jason's on here, G1 Mercury's, said the volume's good. Hopefully we're not having the same issues that we had last time with sort of the volume being too loud and getting that sort of crackling sound. Hopefully the volume mixer is good to go. Tiger Rocks, hey, thanks for joining on, sound is great. And Alex asks, any entrepreneurial books you can recommend? You know, I don't have a lot of books I can think of off the top of my head. The biggerpockets.com is a fantastic resource, I think, for listening to like their podcasts, and a lot of their articles are great. I honestly now spend most of my time, I'll read the occasional article online, but I haven't a lot of time, honestly, to read books. I haven't really just spent the time lately reading any good books. I'm just trying to think here. I mean, like, there's always the classic of Rich Dad, Poor Dad. For me, it was about managing my bottom line, right? Keeping my expenses low. And so I really enjoyed watching shows like HGTV and things like that, where I could learn the process and then find a way to optimize that process and make it more efficient than it was before. So if everyone's doing something one way, you look at that, once you understand that process, you can look at it and say, you know, everyone, for instance, right now is using lumber to drywall, right? They're using lumber to frame, and then they're drywalling the lumber. You can, because lumber prices are up 130% year over year, like the commodity lumber has been in really high demand, and there's like a limited supply because of all the forest fires we were having, etc. So lumber prices at Home Depot and Lowe's and Rona and all those places is way higher than it was even a year ago. And so it's making our renovation projects 10-15% more expensive. All this construction is more expensive, and there's a higher demand as well for those commodities. So what you could think of is, okay, is there another way I could frame this basement? Instead of using lumber, I could use metal studs. Okay, you could use 10 metal studs, right? They're pretty thin little metal studs. Relative, they do the exact same thing as the lumber, but effectively they're water resistant. You know, maybe they'll rust a little bit, but we're water resistant for the most part. We'll do the exact same thing. You just have to use metal screws when you put them together. You can get the hat channel for. Hey, thanks, Paul. Thanks for joining on, watching and learning. Great free value. Yeah, everything I do on YouTube is free at this point. So I'm not monetized currently. I still need more watch time minutes actually. So get on there and watch some of my previous videos. That'd be cool. Once I'm monetized, then YouTube will actually promote my videos. Right now they don't promote my videos because they don't make anything from my videos being seen. So I think they actually try to make them unsearchable because they'd rather that someone goes on YouTube and finds a video that will pay them money, right? And that just makes sense. YouTube's a business. I get it. So I'm just going to optimize and find a way to get working with their algorithm as opposed to trying to fight against it. It's not really about the money for me. It's more about sharing that content, right? And so you just got to think of a better way to do things. So for instance, on a basement, I might have always used, hey Don, hey Michael, you guys are the regulars. I'm going to get to your questions. I appreciate that. Thanks so much for the feedback. I live literally on you guys telling me that I'm doing a good job. Like, I get out here and I put it out here, spend a couple hours on Wednesdays. And Wednesdays are always my toughest days. Like, I saw like 6-7 properties today. Been all around a couple of my renovation sites. Just a lot of things going on. And I get home from a long day and I'm like, oh, I'm just so tired, guys. And I'll be laying on my couch thinking, oh, I just want to have a nap. But then I'm like, you know what? People are counting on me. It's Wednesday. People are counting on me at 7 p.m. to be on here and to share and really help answer any questions, right? So here I am. Wednesday, and a little after 7 p.m. Eastern. So talking about materials, right? For example, lumber I've noticed has been increasing in cost, right? 125%. And I think it's really, really important that we maybe shift, right? As investors, maybe we pick out some of those steel or metal studs and frame the basement in metal. And it's really like this thin, hollow track metal. And you literally just, once they screw together with the metal screws, it becomes strong. Same with the hat channel. It's like this little thin hat channel for bulkheads. and you literally just like screw it together, and as soon as you do it, it becomes strong when it's all together. But the pieces are like flimsy kind of metal, and believe it or not, they're as strong or stronger than lumber. And lumber will, like wood, will deteriorate over time if it gets wet, moisture against the concrete, etc. That's why we always frame off the concrete, right? We have that barrier there. If we spray foam, there's that barrier between the wood and everything. But I actually like metal. I think if you can find framers who know how to use metal and have the ability to cut those metal studs, I call them, and frame the whole basement in metal, you'll save yourself a bit of money. That's like a pro tip you could pick up, and you could pivot your business and think, hey, I'm using lumber, material costs are way up. Instead of just passing that on or passing on to the customer or eating it, those are the two choices. You either eat it in your profitability or you pass on a higher price to the customer. Just find a better way to do it. And most people don't know how to frame with metal studs, but it actually does really well with spray foam. It's a great overall product, super cool installation. I've seen it used in a couple jobs and thought, wow, I wish the guys that I had knew how to do that. As a side note, guys, I am looking in London, Ontario for some really good handy folks, some handy capable folks who are able to, basically we can call them for anything, right? Like if I need a unit changed over quick in a 24-hour period between a tenant leaving on the 31st and a new one moving in, say on the 1st or 2nd, I need to be able to rip out carpets and put in new floors quick. I've got some ads up. I'm going to be looking to hire just the right person on contract, potentially up to 40 hours. But likely an independent contractor makes the most sense from a liability perspective. They can still take on their jobs, but if we need them, we can call them, say, hey, we got a toilet that's leaking. Can we send you to this address? Hey, we've got, I need a smoke detector put in. The state just came by. A fire inspector wants a smoke detector in tomorrow. Boom, I got a guy I can call. Right now, I have two really great people who I'm using, and I'm so thankful. You can't steal those two people from me. Please, no one steal those people from me. But I'm looking for a couple more. We'd like to have about 5, 6, 7, or 8 really good handy people we can call at a moment's notice and just work through a list of issues and problems and just get those kind of handled. So if anyone in the comments knows anyone in London, Ontario who is trustworthy, basically you have to have a vehicle. You got to have a truck or a van or something. You can basically do a little bit of everything. You can do a little bit of mudding, a little bit of painting, change out floors, that sort of thing, a quick toilet here or there. I have plumbers, electricians, but it's nice to have someone who can do a little bit of everything. So we're looking for someone like that as we grow to have that available for ourselves and for the investors. So that's something that I'm kind of putting out there to the world. Who knows? I'm going to take all these questions. I'm letting them kind of build up here while I just rant about material costs and how do you find that competitive advantage. For myself, like I'm fairly good at finding the deal and I'm fairly good at the design aspect as well as finding the best use for a property. I could buy a property on MLS at market value and find a way to crank it another $100,000 in value and sell it a year later for $100,000 more than I bought it for, irregardless of market appreciation. Like if the market stays flat, I can still make money because I'm finding ways to renovate and deliver $100,000 in value. And one way, for instance, is finding properties that are under rented. There's a ton of this going on. In London, we've seen rents come up a ton. And as these rents have creeped up, a lot of the landlords haven't even done the minimum inflation increases for like 10 years. And so these units are under rented, or a lot of property managers in London, I don't know what's going on, but I see these professional property management companies, don't want to throw anyone under the bus, but I see their ads, I see them listing properties cheap. And I'm like, well, why are you listing this quality product for like $2,000 when the market rent is $2,500 to this group of students? And they're doing it because they don't want to show the unit a lot of times. They do it quick, they pick the best tenant, they put them in, done. They don't have to worry about it. They get paid their last month's rent, they're happy. That's how most property managers operate. They are not liable, right? They just put someone in there, they get their paycheck. They don't care if the landlord gets $2,500 or $2,000 because they're not invested in the property, they're not invested in the project succeeding. They get paid regardless just by placing a tenant. So that's something that like I've noticed in the market is an example of just poor management, right? Poor management on properties is a key failure point, I think, for a lot of properties. And that's where I've been able to come in and get a property that's maybe renting and selling at an 8 cap rate, but way under rented. And, or, maybe it needs a renovation. People are valuing the fact that the kitchen's like dingy and maybe it's missing a bedroom and it needs another bathroom. And if it had those criteria, it would comp out at like 325. But as it is, it'll comp at like 220. So that I can get it, comparable analysis, right, looking at the properties. And I can get that property for a significant discount. So anyway, that's something that I kind of have been utilizing. But let's get to some of the questions here. That's the whole point of this. You guys ask questions and I kind of throw out sort of answers, my opinions or thoughts. Okay, can you elaborate, Jason asks, can you elaborate on the cap rate? So a cap rate is effectively a way that we value properties. So a property will have a certain, and I don't have the perfect textbook definition in front of me, and I haven't thought about this. I probably could do a whole segment and sit down and think about it, but effectively, like a cap rate on a property is, you know, what it's trading at in the market based on net operating income. So rental properties, commercial properties, most income producing investment properties should sell on a cap rate. So when a real estate agent types in, you know, they type in like great for investors, like investors, attention, great property, and then they have nothing about the net operating income or the market rents or any of the expenses, and you call them and they have no idea. They're like, we think you could rent for this much. And it's like, well, do you have any expenses, anything like that? Have you calculated the net operating income? Do you know what the cap rate is? Well, no, we know it's great for investors. How do you know that? Investors are after rates of return. Any property can be an investor property, right? So that's something where I think that a lot of agents fail. That's something you can sometimes use to your advantage, or sometimes they overprice properties that they just are single family realtors and they don't have a lot of experience with investment properties. But a cap rate, back to the question, is, and I'm going to get to all these questions, I promise. Talking about property management, got a lot of experience on dealing with that, and I've fired a couple of property managers and hired some, so I'll share what my experience has been. But talking about cap rate, right? Cap rate is effectively the way you value properties. You look at the comparable cap rates in the area. So in my area, an 8 cap rate is pretty typical on an investment property, depending on the area. I mean, between 7 and 9, but about an 8 cap rate is fairly standard. So you take your net operating income. So you start at the top with your rent for the year, your annual rent. So let's say a property is renting for $2,000 a month. So you've got $24,000 in annual income, right? You would divide that by 0.08, and that would give you, or sorry, 24,000 in annual, and then you'd subtract basically your basic expenses, not including your mortgage. So because everyone's mortgage interest rate is different. Some people buy in cash, some people use commercial mortgages, so you can't really factor in the interest. That's the one piece you can't really look at on residential cap rates, because everyone's is sort of different, and everyone's financing is different. But you definitely take in your insurance, your property taxes, a little bit of maintenance, all of your utilities, and then you get sort of a net. It's supposed to be like your net operating income, right? And it's not a true net, but in fact, like most appraisers will use a basic, they'll use like a basic amount for maintenance, and some of this lower or higher. I'll often prepare my net operating income for a property. I'll say I'm bringing $24,000 a year in, top line, and let's say there's $4,000 a year in utilities, so you're at $20,000, $2,500 or $3,000 a year in property taxes, let's just say. So $17,000, maybe $1,000 for insurance, you got $16,000. So what is 16,000 divided by 0.08 would give you like a 200,000 valuation or something? I have to get a calculator out because my brain is fogged today. Usually I'm really good at dividing things out, but that will give you basically your value. So you take the cap rate and you basically turn it into a decimal. So 8 cap rate is 0.08. So you take the net operating income and divide it by that cap rate. So some markets are a 10 cap rate. So you divide by decimal 1. So that'd be 0.1 is a 10 cap rate. 12 would be 0.12. 6 cap rate would be 0.06. Some in Toronto, Vancouver. In Vancouver, I saw someone selling like a 2 cap rate. They're like, oh, it's a great property, a 2 cap rate. And remember, the cap rate doesn't include your financing cost. So none of the investors using like all the cap rates I see anyway here in London, they never are including the interest costs. They're saying, oh, if you bought it in cash or whatever. So I like to make sure there's enough spread for sure. So if you had a 2 cap rate and you're borrowing at 3 or 4% on the value of the property, and you're doing your numbers at 100% of the property value or whatever, then you'd be losing money, right? So these properties in Vancouver and Toronto that sell at 2, 3, 4, 5 cap rates, right? They're losing money. These people are either breaking even or losing money, and their only hope is like a little bit of mortgage pay down. And it's a joke, right? Like, and I saw that comment come up, right? It's a thing though. People are like, I'm buying for appreciation. I'm gonna own this property forever. My family's gonna live in this property forever. Or I have this idea where like, I think Vancouver in a year, all the houses are gonna be like 2 million baseline. So like, I'm safe on this 1.5 million property. I don't care if it cash flows. It's all about the appreciation. And like, there's something to be said about an appreciation play. Like, I can respect it. I can see where, for instance, I did it once on a build that I did. I saw that all the new houses, I realized a trend in my area where people would sign a contract to build a house for say 200,000 or 300,000. And let's say it's 300,000. They would start at 300,000, they'd sign the contract. And if you look at the neighborhood next door, they'd be selling, once all the grass is in, the driveway's done, the construction dust is done, these houses always sold for like 350, 360. and they were building for 300, and I'm like, this makes no sense. You just live there for a year and it's worth 360 because no one wants to go through the stress of having no grass, just having a dust land until they plant the sod, until they do the driveway. No one wanted to live on those kinds of streets, so I built one thinking, okay, I'm going to get this guaranteed like 10% as long as the market's flat. And I always make the assumption the market's flat just because I don't want to bet on appreciation. If it happens, bonus, and it did on the house that I sold that I built, it did appreciate. And so at the end of the day, I did really well. But most of that was not because, like half of that was because I planned on it, half of it was because I didn't plan on it. But that was the only time I ever bought not for cash flow. I did have an apartment in the lower that I did rent out, so there's always like a cash flow. Even the house I live in, there's got to be a cash flow angle as well as an appreciation angle. It's just like my play. There's this saying, and I've been thinking of this actually a lot, where you rent where you live and you own where you want to rent. So I know that sounds crazy. I think Grant Cardone or someone's probably said that before, but you rent the house that you live in, if the market makes sense, and you basically own all the rental properties. And so I'm even myself, I was looking at some houses here in London. There's $680,000, $700,000 houses here in London, about 3,000 square foot, beautiful properties. That if I were to buy it, I have a mortgage, it's like $2,500 a month, and expenses, whatever, well in the 3,000s. And they're rented right now, listed for $2,000 a month plus utilities. And I'm like, wait, I can't even own it for that. Like even if you subtract mortgage pay down, I can't even own it for that. Why are people renting for $2,000 a month? And I go on and I make a call and I investigate this. And my partner and I are talking about it. And we're like, wait, in London, Ontario even, it makes sense in the higher range, only in the higher range. Like if you're buying a house, it's a $250,000 house, it still makes sense to own as opposed to rent. But it actually makes sense to rent instead of own in the higher end of the newer developments in London here. So like the $700,000 houses, the $800,000 houses. I saw a $950,000 house renting for $2,400 a month. A doctor in Toronto bought it and was hoping for appreciation, and basically was happy to break even. He was able to get a really good rate of return, I'm sure, from his bank. He probably put 30 or 40% down in cash. He values his own cash at zero. Some investors just don't value their capital anything. And he's like, oh, I'm going to get appreciation on this. I'm happy if I'm breaking even. And that's in London. That's in my market right now. In markets where I'm getting 10 and 12 and 14 cap rate, I'm still finding those deals. There are people in my same market right around the corner from me, like I literally a kilometer from this house right here, where I'm like well over 1.25% rule, that are renting. Like this house here is a $300,000 house, and I bring in $3,400 a month in rent if I didn't live in it. But around the corner, I can rent a new $700,000 house for $2,200, $2,000 a month plus utilities. That's insane to me. Like my mortgage would be more than that. Plus property taxes, $500-600 a month on those properties, insurance, maintenance, everything, all those things combined. And then I got even smarter, and I started talking to someone who's doing this. And they go and they do like a 3-year rent to own agreement. And they go to that owner and they say, in 3 years we want a right to purchase this property for X price. And the owner's like, oh, well, I built it for 600. Okay, 650. And they'll just write down a number like 650. And in 3 years, if I'm renting this property for $2,200 a month, he's losing money on breaking even basically. He's getting mortgage pay down, making no cash flow from me renting this property. And in 3 years, I have the right to buy the property, and it's going to appreciate over 3 years. So he gets no appreciation and no cash flow. Why are people doing this? Because they're bad investors. And don't get me wrong, these people are very wealthy, very educated people. These are doctors, dentists. Like some of them are even CEOs of companies who have a vast amount of business knowledge, but they don't want a headache. They want to buy a new house that's ready-made. They'll never have any issues. It's like an $800,000 house. They put in a quality tenant. They break even on that. They think, okay, this tenant's never going to call me. They're a professional executive. I'm good to go. And it's crazy. They're thinking to themselves like, break even is like a win. That they're getting mortgage pay down, that's a win. Basically, they're just parking money and getting like bond level returns in real estate, which is much more risky than bonds. So I think it just doesn't make any sense. It's arbitrage in the market. In Toronto and Vancouver, it's even worse. I know people who have properties that are like 1.9 million, 2.4 million, and they're bringing in like $2,500 a month in rent. Like $2 million property should be getting you 10% rate of return. You should have $200,000 a year in rent, but you're getting $25,000 in rent. Sell those properties, guys. Like if you want a property in a market that's now appreciated, you have to think of, this is something I want to do a whole video on, but it's called like the real estate rebalancing. You rebalance your stock portfolio. Your financial planner or even yourself, if you manage your own stock portfolio, will rebalance. If you had a portfolio and you own like Apple shares and they 10 times in value, you would sell those shares and you would sell down to back to the current asset allocation you set at the start. So an asset allocation is like, you say I'm going to have 10% in this stock, 10% in this one, whatever, adding up to 100%, right? And if one stock 10 times in value, it becomes half of your portfolio, right? Because that 10% is now worth 5 times as much. So half your portfolio is now Apple stocks. That's not a diversified portfolio. And the return going forward is probably not going to be very good on a rental property, going back to rental properties, that if you have a property that's like 1.8 million now, let's say you bought it for 400,000 and it was like bringing in $4,000 a month in rent. You're like, oh, I bought it for 4 grand a month in rent, 1% rule, I'm happy. But no. You need to think about market value. Your market value of this property is worth 2 million now, right? You should be selling that property and buying another market or buying better properties. So that's part of why, and I didn't talk about this, but part of why I sold 11 of my properties last year and at the start of this year is I rebalanced. I went to the bank, and the banks never appraise properties as high as they are valued. It's just the way it is. Appraisers never want to give you good value on a property. So I had a property appraised like 400, and I went, this is too low. And the bank said, that's the best appraisal we can give you, blah, blah, stuff. I went and sold it for like 480, right? So 80,000 times 2 properties. So it's like you get like 80 something thousand dollars upside that I kind of lock, all of that cash. When I did the numbers on the property, even though it was a 1% rule property when I bought it a year and a half before, the current market value was such that it was no longer performing that well. So it made sense to sell it and then find another deal at 70 cents on the dollar. So I take that money, I rebalance, and buy another deal. Because most of the value was in me creating the upside. Now that I've realized the upside, the market value was such that it was trading at 7 cap rate. I can sell it and go buy 2 more 12 cap rate properties. So you want to rebalance your portfolio. Really, really important to do that. A lot of people in real estate think, I'm going to own this property forever, I'm just going to hold it. They don't think about rebalancing the real estate portfolio to stay diversified. Because what happens is if one property in one area doubles in value, all of a sudden it's like a 30-year portfolio and it's not cash flowing the way you had designed it to basically when you bought it. So let's hammer some questions. I see a lot of them are coming up. I'll get back to this topic. If you guys really want to hear more about this, throw it in the comments. We'll definitely hit it. Okay, Profit First, Pumpkin Plan, and E-Myth. Heard good things about E-Myth and Profit First. I've heard good things about both those. So thanks, Green Sequoia, for throwing that in there. I know I need to get back to you as well. I've just been super, super busy. Okay, Mike, can you please talk about your opinion on the real estate economy in Ontario, Tommy says. Just a general overview of the current prices in certain locations and if you think we are due for a correction. Okay, so at a high level, I think so by the way, guys, if you don't already know, Bank of Canada increased the overnight lending rate last night again. So we're going to see prime go up another quarter, basically, effectively in the next little bit. It's going to catch up in a couple days. So interest rates have risen again, which is, again, not great for real estate, not great for us investors, because real estate investors buying rental properties make our money on the spread, right? Our properties are generating, say, an 8 or 10 cap rate, and we're borrowing at like 2 or 3%, and we're using leverage 5 to 1. So the key has always been finding that spread, that difference, right? That's the key thing. So if the spread ever gets to a point where we have 8% interest rates and 8 cap rates on properties, there's going to be no margin for investors, and no one will want to buy any properties. So the key piece has to be, there has to be margin there. That's how commercial deals work. There's just less margin. They find ways to get commercial financing at 4 and 5%. They buy at an 8 cap rate. Hopefully, things will, like back in the day when interest rates were really high, properties would trade at 14, 16 cap, 18 cap rate. The returns were really, really good because the interest rates were so high. And that's just the way it needs to be. It's just the nature of real estate investing. So I don't know why I got on that tangent, but back to talking about the Ontario market and why, what my thoughts are on it at a high level today. You're just kind of testing my thoughts today, and I guess today I'm in sort of a medium bullish mindset. I think that interest rates won't creep much higher than like 4%. I think we're going to see like 4% as like the stabilizing point, especially with what's going on in the geopolitical market, with the trade wars going on between the United States and China, the United States and many countries, including Canada. I think it's going to hurt our GDP a little bit. But the catalyst for keeping the market strong today is a couple things. One, I think here in Ontario, we Canadians value home ownership. And you'll talk to people, the reason the supply is so low right now, not just keeping prices up right now, is there's just no one wants to sell their house. Everyone says, well, what will I be able to buy? Yeah, I can sell my house that I bought for $300, for $700, but what can I buy in this market? I need to live somewhere, and I need to own. And for some reason, Canadians think we've got to own a house and a cottage. I don't know why. It's like an Ontario thing. I think it's a Canadian thing. We just like to own a house and a cottage. It's just a thing. Home ownership is something that we just love in Canada, and it's not the same in other countries the way it is in Canada. We just really value that. It's like home ownership is a status symbol. Even if it doesn't make a lot of sense, we'd rather own than rent. Even myself, I was just telling you guys about that deal. that I have right now that I can go rent a place for $2,000 a month. I can go get a roommate in a lower for $800, and I have a couple friends I would probably take this huge house with, this mansion basically, this big house. I would split it with them and take 3 bedrooms for myself and my family on the upper floor and split the rest. But I could rent and get, if I shared that cost, I could rent for like $500 out of pocket and have a contract to buy the house in 3 years, so I can I can own all the appreciation. And I could do that. And I know it's illogical for me to go and buy one of these houses for 700 and put 25% down or whatever on these big houses, and I could do it and value my capital at nothing, and actually it'd be a terrible return on my investment because I could just get an appreciation contract and rent to own. But even myself, even us, like I'm a shrewd investor. I'm in my numbers. I know my stuff back and forth. Ivy graduate. I should know better, right? Even myself, I go and I say, it'd be nice to own that house though. Like it would feel nice to own that house. Me and my wife were like, yeah, it'd be great to own that house. Like it would just feel better, we could do a little renovation to it. We do this or that, make it a little bit better, make it just perfect for us. Whereas if we rent, we can't do that. And so that little psychological demon is there telling me to do bad things, make bad investment decisions, or just buy houses that don't cash flow and live in them. That is a bad investment decision. Most Canadians make bad investment decisions. So there's those group of people that are living the Canadian dream, and we all want to own houses, whatever, blah blah stuff. And those people are going to keep the Ontario market. I think they're going to have to sell the house they have now and buy something else. So that's just, it's going to keep the prices up. I don't know anyone who would sell their house for a loss if they don't have to. And right now, Canadian incomes are relatively strong, especially in Ontario, southwestern Ontario specifically. London is doing very well. Our income to house price is still fantastic. Canadians are actually doing very, very well. We have a lot of like university workers, hospital workers, government workers, a lot of private sector as well here. We're a diversified economy and people are doing well. Like I know people talk about the income inequality, right? And it's a thing, it exists. And it's because the hard working people put their money to work and their rate of growth is exponential. It's how it works. As you invest and as you work harder, that work compounds on the work that you already did. So it makes sense for the rich to keep getting richer. And they keep getting richer at a faster and faster rate. And the lower echelon of society, unfortunately, isn't working very hard or working very smartly. And so they're staying, that divide is growing because the rich are getting richer and everyone else is kind of staying flat, except for minimum wage. Minimum wage keeps getting spikes. Like 30% in the last 5 years, I think, for minimum wage or something, which has jumped rents a lot. The Ontario government was not very smart increasing minimum wage. It actually will help real estate investors a ton, but it hasn't really done much for helping affordability at all. It just caused a bit of hyperinflation. So it's not really helping anyone. But anyway, I'm digressing, getting off on a whole bunch of random tangents because my thoughts are all over the place related to the real estate market. But trying to consolidate this, we've got a group of buyers who want to be homeowners and another group of Canadian people who want to own cottages. And some people are even, I've read articles where they're renting in Toronto and they still own their cottage. So people just want to own property in Canada. I think it's a big draw. But the bigger draw than that is immigration. And Canada has a really great plan for immigration, and we're taking a ton here in London, Ontario, and in specifically yes, Jason, yes, I'm a fan of, not Doug Ford, but I'm a fan of the party. And I think their economic plan for Ontario is going to be fantastic for our overall GDP, and it's going to be great for real estate investors. So if you're a real estate investor, you should have voted blue. It's going to be better for your overall situation. But that's me talking personally. I guess I have some views that do align socially with some of the libertarian views. But anyway, we're going to not talk politics. Keep talking real estate. And there is a bit of a tie over because politics does bleed into the values of properties and the overall economic fundamentals. Most people don't vote on economic fundamentals. They vote on social issues like legalization of marijuana, or they're worried about like their cousin who's on social support and has 5 kids. They're voting on things that are not economic. But anyway, economically speaking, politics and economics are very tied. That's why someday I'll probably end up in politics, just because I'm so sick of all the corruption I see, and maybe in 20 years I'll get involved in that. But anyway, talking about real estate prices in Ontario, bringing myself back in here, guys. Okay, so I think there's this thing that's ingrained in our society that homeownership is good and cottage ownership is good, and there's this whole, what do I buy? What if I sell my house now that's doubled in value, what do I buy? And unless I change markets, which a lot of people are doing, people are moving from Vancouver and Toronto, and they're finding, in London or other places, they're finding properties. This is a huge trend. There's a lot of people moving from Toronto and Vancouver, selling their $2 million houses and buying mansions here for like $750,000, $800,000. So that is a trend that's happening. It's good for my market. Like the markets outside of Toronto and Vancouver are doing very, very well because of some of that exodus from those larger markets, people cashing out. But people still need to find somewhere to live, and most millionaires don't want to rent. I don't know why. Like people, and by the way, guys, there's a stat: the average Vancouver and Torontonian is a millionaire. So the average person in Toronto, if you take the average, has a net worth of over $1 million. So all assets minus all debts, all liabilities, $1 million. So that's just a fact. So the average Vancouver person and the average Torontonian has over $1 million net worth. They're all millionaires. So I know like that's actually true, because of their averaging in, all those people who have had that huge amount of house appreciation, and they're taking in, the people who have 4 or 5, 10 million, that sort of thing, all in the average, right? So that's something that sort of plays in. But talking about prices again, and immigration is specifically, I think, a huge catalyst. And as long as we stick to our current immigration plan, like we did last year, we brought in, I think in London, it was like 1,000 or 1,500 Syrian refugees. That was huge. That creates a huge demand. And eventually these immigrants, they work really, really hard. So that's really, really important, right? Is that these immigrants come here and they want to build a life for themselves, and they work really, really hard. So they start as renters, but they eventually become tenants, but they eventually become homeowners. So that's going to drive, one, the rental demand, which is great, and then eventually they buy properties, and so that helps the overall real estate demand as well. And so I think as long as we keep immigrating, as long as our population keeps growing and Canada stays a desirable place to live and is a safe haven for Chinese money and Indian capital from all over the world, right, is pooling into Canada because it's safe, right? Our political climate is safe. People like to live here. It's a good country. And so I'm a really big fan of basically, I love that. Yeah, I'm not a huge fan of Trudeau myself. But anyway, let's get some questions here, guys. I see some pop up. I go back and hit all these questions for everyone here. I promise I get to every single question. That's my promise. Okay. We talked about the prices and if I think a correction is imminent. I mean, it's possible. It would make sense to me to expect a little bit of a correction. We could see with higher interest rates a little bit of a correction in markets like Toronto. In pockets of London, I definitely think there should be correction. But in the areas that I'm buying for cash flow, and those properties won't correct because as long as it cash flows at 10 cap rate or 8 cap rate, you can't really go wrong. Sorry, my phone's getting blown up with texts. It is brutal. I apologize for that, guys. You guys probably can't see the text coming in, but it's like blowing up my screen, so I can't even see the questions. Hey, Don, thanks. I appreciate that comment there. Don Lewis put in the comment there, appreciating that I spent the time with you guys. Thanks, D. Lee. I appreciate you guys. Check out the replay. People are now 38 minutes in. If you guys are still in 38 minutes later and you just let me rant for the last 38 minutes and you listen to this whole thing, let me know in the comments if you appreciate this content, you found it valuable. If you have a question, shoot it in the comments of the replay of this video. I loved it last video where I had a few loyal people at like 71 minutes, like, yeah, still listening, 71 minutes, I'm here. And like I get that comment come up on my phone, I'll be doing some work or something, and I'm like, oh yes, like warm and fuzzies inside. Like you watched 71 minutes, even though the audio was terrible, even though it was crackling, you stayed the whole time. So that made it really, really worth it for me. It makes my time feel like it was really well spent when people are really getting value from the content I'm putting out there and sharing with the world. Okay, let's hit another question here. Carl Trepanier asked, have you done any flips? Yeah, no. Yes, no. I have renovated properties that were really, really rough and made them really, really nice and created a ton of equity value, but I've never flipped a property. Flipping is going in with the intention, I find most flippers go with the intention to buy a property, it's vacant, they renovate it, and they sell it. I always buy for cash flow, and that's my big thing. I'm going in as a cash flow play. I plan to hold every single property in case I can't sell it, in case the market isn't good. But if I make $100,000, and you might call that a flip, I might refinance that out, or I may choose in a year or two to sell that property and rebalance my portfolio, right? So I may decide to sell a property where I've got $200,000-$300,000 in equity created, pull that out and pull some out and buy some more properties, But every property that I buy after I sell that property is a better one than the one that I sold, right? Because I'm selling it at market value, and I'll buy something else below market value and find a way to realize new value. Oftentimes, just getting the rents up is a huge thing, and that often does involve a little bit of renovation, or landlords have deferred maintenance. Like there's the 3 Ds, right? There's like death, divorce, downsizing, and deferred maintenance. I guess the 4 Ds that you want to look for in a deal. And so if you can find any of those 4 things, you've probably got a deal there. Deferred maintenance is huge. People don't do windows, roofs, inside of it's rough. They've just delayed the maintenance. So deferred maintenance, huge way to get value. People in the market tend to overvalue how much those things cost. They see a bad roof, they see a little leaking in the drywall. I don't want to pay more than I want 50,000 off the purchase price or whatever. And you can fix that for like 5-7 grand. And so I'll go in there and value what it actually cost me to fix that, and I'll get the difference. So if it cost me 10,000 to fix that issue, the market punished that property by 50,000 because of the issues. I'll make that $40,000 spread. And so that's sort of what a flip's all about, right? You're buying below market value, you find a way to realize after renovated value. And so, yeah, I'm not a flipper. It's not my business. There's a lot of carrying costs. I don't like that. I'd like to buy a property and ideally get tenants in there and cash flow it, and the cash flow offsets the holding costs, so I have no holding costs. Michael, I am writing a book. It's the roadmap. It was supposed to be called the roadmap to retirement or the roadmap to fire. I just haven't got time. But too busy helping everyone learn about real estate, and a lot of people call me and I go to a lot of lunches and stuff like that. And now I have investors poking me saying, Mike, like, let's do a property together, 50-50 joint venture, let's just do this. Your property management company can manage it, and I don't want to do anything, I just want you to take care of everything, and I want a nice like 20% return on investment, or I see you got 80% on the last project, maybe I'll get 60% return on investment. I'm really good with that. Like, I don't want no 8% in the market, I'm happy with 80%. And so that sort of thing has been keeping me really, really busy, and just it's a lot of work to educate investors and get them on the same page. Once someone's done 1 or 2 deals with me and they see the results they're going to get, it's going to be really easy to do like deals 2 to 20. And so it's at the start that's the hardest, and that's the nature of pretty much anything that's worth going after. I think anything, the first like 2,000, 3,000 hours of doing something, it's the hardest. And so it's putting that legwork to get that property up and running until it cash flows, or it's that legwork to build the relationships with those investors that you want to work with to buy the properties, and then eventually once you have the relationship, then it's like, hey, I got this deal, let me get the details, and it's like within an hour, right? We're like, boom, we're good to go, let's buy this property. So that's the sort of thing I want to do to get to build this empire, and eventually at some point I will have a company where I'll have people that'll be able to help me do things more than just the trades guys I have now, but even a bigger company where I have property managers and assistants and that sort of thing. And that's a cool goal that I'm sort of reaching towards today. I inherited something terrible from my grandma, and that is an insane work ethic. I can't stop. I have to do something every day. There's always something new that I got to be trying out, and that's just me. So retirement, I could be retired. I could be just sitting on a beach, but I gotta just about balance for me. I'll go hard for 5 days, then take a day or two to relax, and then I'll go hard again. Just can't help it. Let's get to some questions here, because I'm going to talk about the market specifically. I saw one come up about Brampton and stuff like that. Can happily share my thoughts on that. Okay, scrolling up. Spencer Ritchie. Hey man, love the channel. Hey, thanks, appreciate that. Question, what is your favorite method for deal sourcing other than MLS, and why? So my favorite method of deal sourcing is probably Kijiji. No, my favorite method of deal sourcing is referral. That is my #1 favorite. When someone calls me, a neighbor at a rental property will call me, because I'll often talk to all my neighbors when I buy a property, and I'll tell them like, hey, I'll pay $1,000 if you know someone who's willing to sell a property, if I buy the property. And I don't talk about price, I don't talk about any of that. I say like, I'll buy anything, distressed properties, doesn't matter, I'm fine with that. And when I go into the property, if I like the property, then I'll make an offer. If the deal closes, I'll pay that person for referring me. So referrals are the best because they're warm leads. Like the person wants to sell, they're motivated to sell. Sometimes on Kijiji, people are fishing, wasting time. So that's my favorite, is a referral. It's my #1 favorite deal. It's been my best deals have been referrals. I've had some good deals on MLS though, and specifically, okay, when I say MLS, I mean pocket listing. So not quite on MLS yet, but just getting listed. So I get it before anyone else gets it. Agent calls me and says, hey, I got this deal, come on MLS tomorrow. And I've got an offer in before anyone else can even see it, with their 24 hours notice and all that. Those are my favorite deals. When those fall in my lap, they're like little treats. I'm like, ooh, you got a deal that's not on the market? Oh, nice. Let me get in there. I mean, lately it's been hard. Like the market's been really crazy the last 12 to 18 months here in London, and agents don't want to call you with pocket listings, or they save them for their favorite clients. Hopefully that, for some agents, that's me, but maybe not for a lot of the agents here. Um, yeah, so that's my favorite deal. Is like, I guess the referral deal is my favorite. Is just someone that's a warm lead that someone told me about, like, oh hey, my brother Joe wants to sell his house or whatever. Like my neighbor Betsy wants to sell her house. Would you go take a look? That's my favorite. It's private because there's no agents involved. I can do all the negotiating myself, control the whole deal myself. I have a lot of fun with that. Like I love that process. I don't want to outsource that ever. Even if I get huge, I still want to have my hands in the deals. I enjoy that. Next is MLS. You can still get good deals on MLS if and only if it's not marketed properly. That's the only way to really find a good deal. Or there's an angle that no one else has considered. So it's a single family, you can maybe duplex, and you know how to do that really well, and no one's considered that angle, or something like that, right? Or a property that's just been, no one's paid any attention to because it's July and no one's looking in July for properties because everyone's on vacation and holidays and it's hot out, and who wants to look for properties when it's 35 degrees Celsius out? So those sorts of deals. But yeah, there's still deals on MLS. You find them all the time. Kijiji is a great source of deals, private deals. I like those. And then wholesale deals too. All wholesalers call me with their deals, and I'll happily pay them $5, $10. I paid someone $14,000 for a deal. So I'm happy to pay, a pile of cash for a good deal. Everyone's got to get paid, and there's more than enough money to go around. So don't be afraid to pay someone. If someone calls you and says, hey, we got this great deal, $14,000 cash for the deal. Most investors would be like, ooh, I'm afraid. Like, I don't want to pay you $14,000 cash for that. Your time, like, it's been like 8 hours getting that deal, 4 hours getting that deal. I'll never pay you $14,000. I will always pay that person $14,000 if the deal is good enough, because I value that deal, right? If there's $80,000 margin, I'm happy to give them $14,000 of it for just handing me the deal. I don't have to do anything, other than maybe do a little renovation or something. So those are my thoughts on the best kind of deals. Okay, let's hit up some more comments here. We have a ton to get through. Scrolling up here. Michael Chong asked my thoughts on Kevin O'Leary. I can't believe we still have 20 people tuned in 47 minutes later. You guys are the loyal bunch, and I really appreciate you, all of you. Each and every person who's watching right now, I appreciate you. And I appreciate that you wait until I get to your question. And if you're still stuck on here, I promise I always get to the question. So, Kevin O'Leary. Kevin O'Leary's a boy. He's an Ivy grad, actually. Did his MBA at the Richard Ivey School of Business here. The best business school in Canada. Like, you can't even debate that with me. Like, Queens doesn't stand a chance. Seriously, I'm going to debate that blue in the face because I'm a graduate there too. So, and I also have to justify the fact that I paid them $65,000 in 2 years for tuition. So, $30-something thousand a year in tuition. I have to believe it's the best school. But no, seriously, it is. The case-based method of learning is the best way to learn because you get to practice in a safe environment. You get that really quality education. The facilitators are like some of the best in the world. A lot of them like are previous COOs and just really well connected individuals. I'm a huge fan of the program. It is intense. Like some of the richest and smartest, brightest, best people in Canada in the program. It's very immersive. But getting back to Kevin O'Leary, so he's been through the Ivy MBA. Anyone who's been through Ivy and got in, say, the top quartile, which is like the top quarter of graduates, myself included, anyone who's been through the Ivy program and is in the top quarter, guaranteed they're smart and they're working. So that's like, if they've been through the Richard Ivey School of Business, they've been accepted to it, and they were the top quarter of the program, right off the bat, like I would always hire someone like that. Because I know that they're hardworking, I know they're smart. So anyway, Kevin's been through that program. I don't know how he did, probably well. He did get really lucky with his software, learning business or whatever that he sold for like $1 billion. But I think he's a smart businessman, and I watch him on Dragon's Den and Shark Tank and stuff like that. I see some of the programs, like that new app he came out with to help people save. It's like the Bean app or something, Beanstalk, where he can help you invest in micro fractions of stocks. I think that's fantastic to get the average DIY investor investing in the market in general. So I think that he's got a good mortgage lending company. He's in a bunch of different companies, obviously, spread his wealth out. He has a cottage up in Muskokas, which is kind of cool in Ontario. So he's like a local wealthy business individual. And yeah, I think a lot of what he has to say is smart business. Just a lot of smart business analysis and stuff like that. I hear a lot of what he says is good stuff. As a person, I think can be I don't know. I think he's a bit hard, but maybe Dragon's Den plays that up a bit more than I've never met him in person, so I can't really say one way or the other. Maybe someday I'll go meet him and we'll have a glass of wine. Um, so I don't know. That's my sort of thoughts on Kevin O'Leary. He obviously knows his stuff. He's a very wealthy investor. What time do I sleep and do I wake up? Michael Chung asks. It depends. Lately, I've been sleeping about 1:30, 2 o'clock in the morning, and getting up around 8:30, then going back to sleep for an hour till like 9:30, 10 o'clock. It varies. I was on a trend where I was going to bed at like 3 a.m. every single night. I never, ever sleep before midnight. Never. I will always be up past midnight. I think my best analysis happens when the moon's out. Like I've always had my best insights, my best breakthroughs when the moon was out. So that's just me. I also need like an hour to wind down at the end of the day. So when I get through my insights at like 1 o'clock in the morning, I want to watch a TV show or something to just relax and wind down. So that's me. I don't know if that helps you at all in real estate investing, but gives you an insight into who I am. I'm a Scorpio, so I guess apparently according to the horoscopes, I get my energy from the moon. Year of the monkey, so I don't know if that has anything to do with it. I've heard people who are into astrology and stuff like that tell me that I get energy from the night because of when I was born and some random other horoscope stuff. I don't know. I'm just not a morning person. I don't do my best thinking in the morning. I sort of just that's right, moon energy. I just definitely feel from the moon instead of the sun. But that said, like I do really good stuff in the afternoon too. I just nothing in the morning. The morning for me is like I'll go on site and just be like surviving. I probably need to start drinking coffee. I just don't drink coffee. Worked at Tim Hortons for like 2 years and I still do not drink coffee ever. Like I never drink coffee and I should. I totally should. Gonna be like get to a point where eventually I'm gonna need coffee. But right now I'm just not a morning person. I get a lot of my energy from the afternoon and the moon. So there's a random insight if you guys care. I guess Michael Chung, your question obviously shows that you care. You care deeply about me as a person, and I appreciate that. Okay, so F Sutherland asked, "Hey Mike, I'm considering outsourcing property management. I have a property that I need to turn now. I have a property that I need to turn now. Don't know whether I should pretty it up and fill it, then outsource, or go to someone now. Thoughts?" Okay, so the two pieces there being whether you should renovate it. If you're thinking of turning it as in like selling it, if you need to sell it, I definitely think you should get full MLS market exposure if you can. Try to sell publicly, and I definitely think it's really important for you to take the time to renovate the property because the market will punish poorly renovated properties. You spend even $5 grand renovating, you'll probably get 10,000 back if you renovate strategically. So do the things that are strategic. We can talk about that. The other thing is making sure your property is the most presentable it can to the market. So curb appeal. If you have bad tenants in there, get those tenants out because the market will punish you for having bad tenants. If you have any vacancies in your property, make sure 100% you get those filled because the market will punish you for having a vacant property. So one condition, if you fill a vacancy with a bad tenant, that won't help your property, that'll hurt your property. So put in a really good quality tenant, someone's gonna keep the property clean. You can go, one of the things I like to do is say, hey, can I see where you're living now? I'll say to the tenant, will you take me to where you live now? And they'll take me to where they live sometimes, and that's a great way to see how someone lives. That's a better test than anything. Go to where they currently live, see the quality of the house they live in, see what the condition they keep their home. That'll tell you a lot about how they currently live and how they're gonna treat your property. So if you're selling, you want tenants that are flexible, they're not gonna be resistant to showings. It's the worst when they're like, they have 2 dogs. Tenants with pets too, really hard to sell properties when they have a cat or a dog. It's tough. A lot of people are afraid of pets, so no pets if you can. Get nice quality tenants in there if it's rental property. Definitely fill all of the space there. You don't want to leave any vacancies because then you can say, look, you can target an investor as well as maybe a home buyer, and that's sort of the big thing. Okay, I saw your question, Bobby. Just didn't know whether I should fill it myself or a property manager. We'll talk about property managers in my experience with them. I interviewed like 10 property managers, and I didn't find any that were good real estate investors. Almost everyone I talked to had almost no properties and just did property management. And I think the best property managers have properties of their own. They understand what it's like to operate a rental property for their own. I also think if you can find a property manager that's aligned to your interests. So one that isn't just paid to place a tenant. Because if you pay someone to place a tenant, they don't care. They're gonna get their paycheck and disappear. Their goal is to just get someone in there as quick as possible. Their motivation is what's the least amount of time I can spend to get the tenant placed, right? Get the most payout. They're not gonna spend 100 hours going through dozen showings and 20 tenants. They're gonna take the first two that come in, they're decent, right? And they're not gonna get max dollar, because if they get 2,100 in rent versus 2,000 in rent, I mean, they're probably not gonna care as much. So a good, and this is part of why I've started a property management company, because there's just so many bad property managers out there. I hear horror stories about them stealing from properties, stealing rent, withholding rent. There's so many lawsuits and things like that coming up that it's just, yeah, I mean, I'm a big fan of finding a good property manager, because bad management is rampant, there's a ton of it, and managing properties sucks. So that's why, like, I won't manage, like, I right now don't wanna manage any properties that I don't own with the person. So I'll have a joint venture agreement of some sort with the person who is my investor, and I'll manage the property as part of that. You know, I'll use the property management as a loss leader, right? I'm not gonna make any money on the property management, but I would do it because, yeah, effectively I would do it because I gotta build that relationship, and most of the investors don't want to do any of the work, right? And that's fine, I get that. They're from Toronto, they're from Vancouver, wherever they're from, and they don't want to be here in London dealing with the problems. And I get that. Like, even myself, I did a joint venture partnership where there's an active partner, I'm the passive partner, and it's been fantastic. Like, my return on stress, time, effort has been fantastic, and I'm fine to give up half the deal to that person, right? For that sort of symbiotic relationship. It's worked really, really well for me. But yeah, to answer your question there, okay, so you're saying I just don't know whether I should fill it. Yeah, so yeah, an experienced property manager, one who's been around for a while, who you can trust to do quality, quality management of the repairs and maintenance, because you don't want them to hire a plumber that's gonna make 50 or $100, an hour and bill you like an $800 job to fix a shower or something, right? You want to find someone who's been a property manager, is well connected in the market, who knows, like, some of the questions I would ask is how many contractors they know, and what are sort of jobs those contractors have done before, and what's their billable rate, and like for the contractors that they have. And I don't know. The other thing to keep in mind too is you get what you pay for. So if you go with really cheap property management, I did that. I ended up going with the cheapest property management, and I jewed them down. That's the wrong verb. It's not a verb. I negotiated down the rate that I was paying them on the management fee, and I paid them just a fixed per unit price, and they were never responsive. I was having to manage the manager, and it got to a point where I had to let them go because it was more important. Oh, my wife just jumped in and says bath time. I have to wrap this up pretty soon, so I'll go through these questions quick. But yeah, effectively finding someone who you can really count on to be there, at midnight when the toilet's leaking or whatever, or that's right, GG, good game. Or maybe you find someone who has a lot of experience placing quality tenants and knows a lot of quality tenants and has the experience vetting tenants. Ask them, hey, what's your process for vetting a tenant? What do you go through? Do you look at I don't know, let's call it credit checks, go look at their property. Bank statements are a fantastic way. That sort of stuff. So let's get through these questions here. Okay. And by the way, guys, I know I said like drew the price down, but like I am a little bit Jewish, like my heritage, like 1/16, so it doesn't make it okay, but does a bad slip. But it's not a verb. You cannot Jew someone down. You negotiate someone down. Okay. What cap rates do you look for? Nicholas Grenshi asked. Okay, so I look in my market for a 10 cap rate. That's ideal. Sometimes I'll be flexible if there's an appreciation upside as well. Then you can play that angle up as well. And if you can double your down payment just on forced appreciation by doing a strategic renovation or placing good tenants when a property is vacant, that's a huge value add too. And so there's several ways to make money in real estate. I just think you need to be aligned to cash flow first and foremost. But yeah, 8 cap rate is sort of like the bare minimum. Mike, can you send me a link and a breakdown to the numbers for us? Or can I send you a link? Yes, Tiger Rocks, you can send me a link. Feel free. Send me a link and I'd be happy to break down the cap rate for you guys in a future video. I know it's previously zoned duplex, but not sure whether it'd be worth it to get the zoning back since I don't think I can rent it out for much more. Okay, I think you're talking about a property. My thought is just rent it out. if something's been rented, there's tenants in it, the municipality can't force the tenants out. They can only say once the tenants are gone, you can no longer rent this unit out. So even illegal duplexes that are rented out, they can't force the tenants out, they're not allowed. So you would help an investor get a little more cash flow if you rented it out. But yeah, I guess you're taking a risk. Obviously, the city doesn't have it legal. You have to go through the process to make that legal. That piece of paper can be worth a ton of money in some markets. Sometimes a duplex is worth less than a single family, depending if it's a like a family suburb area or whether it's more of an investment property type area. I guess those sorts of properties I find personally. I always find duplexes are more valuable, more attractive if they're legal than if they're just an R1 nanny suite. But there is the ruling now here in Ontario that you can, you really can use the R1 affordable housing initiative out of Ottawa. That in Ontario they have to allow secondary dwelling units. So long as it meets certain criteria, like less than 5 bedrooms, so you can make a secondary dwelling unit in a single family house. That's allowed now, and the city can't stop you. So pretty much anyone can, if they meet current building codes, can get a second unit in a property, and the city cannot stop you. That is ruling straight from the Ontario government. Even in London, they've been pushing it down. They just cap it at 5 bedrooms total between the 2 units. So you could call it like a 1+1 and a 4+1 or something, I don't know, to get to 5, or a 2 and a 3. Thanks, Jason. Michael Chung says 2 cap rate in Vancouver, lol. Yeah, Uncle G, that's right. I don't agree with everything he says, but some of the stuff he says is on point, obviously. Rent where you live and own what you can rent. That's the saying. You've got it. Rent where you live and own what you can rent. He must have been the guy that said that. What is your house tax situation now? How many units, sizes, rental income? So I live in a duplex right now, and I live in the 3-bedroom upper, and I have a tiny house as well in the side yard, studio. They call it like a studio, garden studio. And I have a lower 2-bedroom apartment as well. So I get $1,000 a month from the lower, and up here could probably get around $1,500 a month, but I live in this unit, so I get nothing. So $1,000 from the lower, and I get $725 from the garden studio that I rent out, tiny house. So I get about $1,725 plus internet, $1,750 a month coming in. My mortgage is $1,000 a month, so it offsets my property taxes, utilities, etc. On a good month. So if I have vacancies or whatever, then it's not going to be that good. But I try my best to almost have no vacancy because I'm on top of it. That said, I'm very selective with people living, as my neighbors. Okay. So Jason asked, Mike, what do you think there is potential in St. Catharines, Niagara on the lake market? How are you comparing that to the market of Windsor and London? London and Windsor are totally different markets. I don't have a ton of experience on Windsor, but I know London like the back of my hand. Like, London is my home farm area, so definitely know London really well. Windsor, I have some experience in because I have some friends and stuff who are from Windsor, and I've been to Windsor several times and kind of get a feel for the market. Niagara and Hamilton, I think the prices have come up quite a bit. I hear the cap rates aren't as good there, so you're maybe buying more for appreciation than cash flow. That's sort of my thoughts on it. I don't know. Long term, probably be all right. Niagara Falls is a major tourist attraction, right? It's one of the world wonders, right? So I don't think you could do too bad in that area. And I hear good things from people who I know who live there. I think it's hard to find good cash flowing properties there. Sort of my thoughts. Okay, let's get these questions hit. Come on, go up. Okay. I'm gonna go really fast here, like turbo time. Tell me also you like the New Ontario government. Yeah, we talked about that. Thanks, Don. We're moving there next year. Very cool. Will you ever run for Prime Minister? Who knows? Probably not. Underpaid and a lot of work. Jason, DM me on Instagram. Okay, that's Don just saying that. I guess Don Lewis knows more about St. Catharines. I don't have a ton of information on there. I have some people who I know who have properties there. They cash flow decent. Okay. Best 38 minutes of my day, really. Thanks, Jason. I really appreciate comments like this. And thanks, Tommy, for saying thanks for the response. Tiger Rock says, put an alarm to wake up for this. Serious. Tiger, where are you from? You must be in a different time zone to wake up right now for this. But I appreciate that. Like, you actually wake up for this. Might as well. Wednesdays is amazing. Um, Michael asked, will I write a book? You guys know I will write a book. I am writing a book, and just probably be years from now when I get a chance to actually sit down and finish actually writing it. It'll probably be on personal finance, and then it'll be on real estate. So I'll start with personal finance, because spending less, earning more, and maximizing returns are so important. Like, you can make $1 million a year, and if you spend $1 million, you have nothing. And that's the real problem we have in our society today. Everyone's spending. They don't know how to be frugal. They don't know how to delay gratification. That's the most important piece. So if I could give tricks or tips to help people delay gratification, that's super important and valuable. What do you think about the market in York and Brampton area? You know, Brampton, it has a lot of, Brampton is more affordable than Toronto, I guess. So I hear some things about some of the tenants that people have had in Brampton haven't been fantastic. They've been very unclean. And so that's been something that I think that kind of weighed on the quality of the property, and so there's a lot more maintenance. They change the floors more often, stuff like that. So just be careful on the tenant that you select in Brampton. It's a bit rougher of an area. I don't want to like throw the whole area under the bus, but sort of my thoughts on the area. It's, you know, I guess if you have to work and live in GTA and you have to work in Toronto or whatever, then it's a more affordable option than living in downtown Toronto. I think it's probably tied closely to my overall predictions for the GTA, which is, I think I'll keep chugging along, but I don't see a ton of major appreciation right now for Toronto, personally. So my thoughts there. Okay, let's go up here and hit some more of these questions quick. Okay, can you adopt me? Michael, that's a good joke. No, but you know, you probably come stay with me for a day and follow me around, or come learn with me. Alan Lawrence retracted his message. I wonder what he said. Okay, those questions we answered with Sutherland. Thanks, guys. I'm gonna put in the, yeah, I saw the text come up too. Yeah, I wondered if it would be worth it to get the zoning on a refinance. It's legally a 5-bedroom now. So yeah, I mean, if you can go through the stress and the effort and get that result, the market values certainty. So if it's certainly legal instead of possibly legal, it's more valuable. The question is, what's your time worth, and what is the probability of you being able to execute on that? I've been able to convert single family to triplex, get triplex that was illegal to legal, duplex, legal to legal, single family to duplex. I've done all that. It's a lot of work, but the payoff is good. So yeah, can't always guarantee it, but it's a good option. Okay, hey, no problem. Happy I was able to answer your questions. Tiffany Wanner asked, hi Mike, do you know of any women investors who are into real estate? It seems to be sort of boys club to me. Tiffany, yes, there's a group here in London of ladies who do it. My wife does it a little bit of, like, she's a little bit of a real estate investor, but yeah, I mean, I think it's because guys tend to be, like, males tend to be really work in construction, and they tend to be more familiar working in construction, whereas females have a harder time getting into construction. But I know a few great people in London, a few great females in London who are killing it. And there's a group, it's called BITC, we'll leave out a letter, ES with buildings, I think it's called. I don't even know what it's called. I just heard of the group forming. It's Ladies in Real Estate or something. There's a group here in London of ladies that are doing that. And yeah, females kill it in real estate too. There's no reason that it should just be all male. I think that, you know, many women are afraid of the renovation aspect, or afraid of working with rough contractor guys, maybe. They just aren't gravitating towards it. I don't know why there's more males than females. There are a ton of female real estate investors. I just don't see a lot of them working on their properties actively. Don't know why. It's just, I don't know. But there's tons of females in real estate that are investing. And there's a club here in London that's specifically for that, women in real estate. But yeah, I'm supportive of anyone doing real estate investing. Everyone should do real estate investing. If they want to put in the effort and the time, obviously it isn't fit for their lifestyle, don't do it. Because if you're going to buy property and not put any energy into it and not maintain it, you're going to lose money. And so you got to be able to be willing to put in the energy to learn the systems, put those into place, and spend the time, right? If you don't spend the time and the energy, real estate might not be a great investment, it might be a terrible investment for you. So that's something that is something to think about. Same with, like, a lot of females I know buy condos because they're afraid to buy houses, but you know, it's not as hard as you might think. Once you buy one or two, you'd realize that, you know, it's not as hard as you might think to find people to do the work and that sort of thing. So and you can do the work yourself too. Okay, so Mike convinced me to move to London. I've already convinced my wife. Jason, that'll be. I should do a video on how great London, Ontario is. I am a huge fan of London, Ontario. It's a very cost-effective place to live. Fantastic. Um, you know, I think London, Ontario should have been. So it actually was designed. London, Ontario was designed to be the capital of Canada. It wasn't going to be Ottawa. It was going to be London. And as a colony of England, that made a lot of sense. A lot of our streets were kind of built around London, England. And London should have been the capital. It isn't, but it's in a great location, I think, as far as like surrounded from Toronto and Windsor and all these places. London's in a great location. I like London a lot. It's the forest city, so there's tons of trees. Air is fresher. I go to Toronto and I'm like coughing, smog. Just feels bad being in Toronto. I go there for like a weekend or whatever, and I got to come home, like back to London, get some fresh air. You know, the cost of living too is really nice in London. You can rent like a really nice house. I'm talking like 6-bed, 4-bath, 2-car garage for like $2,000 a month. So cost of living here is great, and cost of groceries, all of that is cheaper here in London than Toronto. I've done the comparisons. I've been in No Frills here, No Frills there. I've done it, and you cannot argue with me that Toronto is more affordable. It is not more affordable. So there's your pitch. Not a very good pitch, but a pitch. What do you think of wholesaling in Canada? Are there any wholesalers you recommend working with? Do you think wholesaling is the best way to get started in real estate with small capital? Alan asks. Yeah, so Alan Lawrence, I think that wholesaling can be a great entryway into real estate investing because you only need like $1,000 to tie up a deal as a deposit, and you just have to learn how to write the contracts. And if you have good people skills, you can get it. That's right. Price matching is really important. You can find really great property deals, and you can cherry pick the deals for yourself if you're a wholesaler. But it gets you talking to people, right? The problem with wholesaling that's hard, I think, is that you have to have the experience. And where do you learn that from? Maybe you have a wholesale with someone who knows what they're doing and then go off on your own after. It's hard to get into wholesaling without a mentor, without someone to work with in the beginning. Very, very tough. And you have to have that network of investors that you can trust, that trust you to take the deal. Because if you don't know anyone, you're just wholesaling, you got a great deal, it's not a ticking time bomb of like 30 days or 15 days to get rid of this deal with someone. You need to make sure that you have that network of investors that believe in you and trust you. And I think the best wholesalers can close on the deals themselves and do close on the deals themselves. Like if, for me, for instance, I got the 5 deals, right? And I just closed on, I'm offering on another one today, so we're gonna have 6. If someone didn't want one of those deals, I would just buy it myself, right? So and I would just go buy it myself, document the process, put it on YouTube, and be like, here was $90,000 you guys missed out on. And those investors that didn't pull the trigger, they'll be like, wow, I wish I would have done that. It would have made $90,000. Return on my capital would have been fantastic. So that's something that helps as a real estate investor and a wholesaler to have that all in one. Okay, next question. I live in Vancouver. Where do I invest here? She asked my partner. He's got property in Vancouver. I honestly wouldn't buy anything in Vancouver at all. I don't believe in I don't believe in buying for appreciation, and I don't know what the market's going to do long term. I know for sure that right now you can't cash flow in Vancouver. It just doesn't exist. You don't get the cash flow. At best, you break even. So, yeah, I wouldn't invest in Vancouver, honestly, unless I had to live there and had no choice. Which, like, the cost of living is so high that I don't know why you want to live in Vancouver. But I hear from all the people that I know, all my friends that live in Vancouver, that it's the best place to live and the lifestyle's great. I didn't see it when I stayed there for 2 weeks with a friend. Alan asks, can you mentor me in real estate investing? Yes, this is what, like, these videos I create are me trying to help mentor you and teach you. But yeah, I'd be happy, obviously, to have a chat. I'm getting a lot of messages, so it's hard for me to get through with everyone. A lot of people want to come check out for a day, follow me around. I'll try my best to accommodate everyone, but as I get bigger, the best I'll be able to do is like live streams like this, or eventually I might even go live stream at a property or something. That would be kind of cool. Stuff like that, get you in the trenches and seeing what I'm doing and learning that way. I don't really have an interest right now in starting like a course or a mentorship program. I just don't have the energy for that. I'd rather just work with real estate investors and help them build their capital and having more fun with that right now than I am with charging for coaching and stuff like that. It's not me. Maybe someday I'll get to that point where I can build a course or something, like a mentorship program. But right now I just don't have the resources for that. Maybe someday. Happy to help where I can. If you message me, slide in on Instagram and send me a message. Same with on these videos. YouTube's a great place to ask questions, so ask any questions you want. I'd be happy to show you and share with you what I know. Jason and Dawn are connecting. That's awesome. Great Q&A session, Mike. Thanks a bunch. Really appreciate your answers. Thanks, Jason. Really appreciate that. And price matching is fantastic. My wife is so good at it. I should go film. Like we get $200 in groceries for like $90 sometimes. We got the student discount going, 10% Tuesdays. We got the price matching going. The loss leaders, you know, we're grabbing everything about the coupons. We're doing it all, right? We're doing it quick, right on the phone. Like apps like Flip are fantastic for that. So huge proponent of finding groceries for half price and living affordably. Thanks, Tommy. Really appreciate that. It says, fantastic episode of Wise Wealth Wednesdays. Thank you so much for providing all the knowledge and putting the effort in for these weekly streams. Thanks. I really appreciate that. What are the top cities you recommend for first-time investors starting to look? The city where you live might make the most sense because you're hands-on, you can touch it. But I'm a big fan of London. I think it's one of the best markets in all of Ontario. I'm biased, but I honestly believe that the numbers are great, solid appreciation, and it's a diversified market. It's not like you're investing in like Sudbury, Thunder Bay, where you're relying on just like forestry and mining, right? You've got so many diverse industries within London that we have like one of the biggest university towns, tons of hospitals, a lot of public sector, a lot of private sector, tons of manufacturing. We just have so many different industries and jobs that it's fantastic. Overall, I like London. Can you live stream at a property? Maybe. The only thing I'd think about is internet. I don't have enough on my phone to live stream. Like that would destroy my data plan. And I only pay $25 a month for my cell phone because I have this plan with like 1 gig of data and unlimited calling and texting through Public Mobile. Guys, if you want to get a cheap cell phone plan, Public Mobile is fantastic. I get $1 off a month if someone joins. It gives them my phone number. So message me if you want to join Public Mobile. Just throwing that out there. I can save $1 a month on my cell phone plan if you join Public Mobile. And yeah, I pay $25 a month. The plans are fantastically cheap. You just bring your own phone. The lowest we paid is 0. That's amazing. I love that. Or I use PC points sometimes to get my total down to 0 as well. Malco, hit me up with a message. Maybe we'll joint venture a property here in London. You can get the returns of London without having to do any of the work. I can find you a property here. We'll work on it and make it work. Anyway, I really have to wrap this up. It is bath time. I can hear my daughter in the background. 77 minutes. Thank you so much, guys, for tuning in this whole time. And for those 14 people that stayed right to the end, you are awesome, all of each and every one of you. Save your questions for next week. Let me know in the comments, guys. If you watch this whole video through, let me know that you stayed the whole way through. I really appreciate that. And if you got value from this, like, share, subscribe, throw it up on your Facebook, share it with friends, private message them. If you think someone should be investing in real estate, you want to get them started, send them my stuff. That'd be really cool if more people watch this and more people got value from this. It would make it more valuable for me. Eventually I want to have a 1 to 10,000 conversation, not on the live streams. That'll probably always be my niche followers, but on my videos. And if you want to see a certain video or a certain topic, let me know in the comments. I will do a video on that. I need to do some more videos for you guys, so send me the topics that you want me to hit up. I got a list of 100. I can pick some, but I know I want to tailor content for the audience. So send those messages. Let me know. And as always, guys, spend less, earn more, and maximize your returns. You have your top line, you've got your bottom line. You want to make sure that there is definitely some margin in between so you can save and invest and really build your wealth, unlock a wealthier you. So as always, guys, spend less, earn more, and maximize returns. Mike Rosehart, out. Thanks for tuning in, guys. Cheers. Oh, I'm still streaming live.